Ladies and gentlemen, I now hand over the conduct of this session to Shri J.K. Mahapatra, Secretary, Rural Development, Government of India. So the stage is all yours for the next 1.5 hours. Thank you.
Thank you. Because of the delayed start, we have I would say, this truncated post-lunch session. And therefore, without wasting further time, I would request Mr. P.D. Roy to give his opening remarks. And after that, one by one, the panelists will share their views on the 4 themes which have been shortlisted for this afternoon's discussion. Mr. Roy.
It's both a great privilege and an opportunity to bring some of the thinking of the northeastern part of India. The Committee on Finance is actually seized of this matter as to understand what is actually happening in terms of rural credit, the efficacy of all the public policy instruments over time that have now been at the forefront of trying to alleviate not only poverty, also to see that farmers get better farm incomes. Every time we start thinking about whether there is more, farmers are getting more credit, we get the answers, yes, they are getting more credit because the rise in terms of short-term lending has gone through the roof. There is an interest subvention which started not so long ago. And today, as was already talked in the morning, farmers are getting credit at, short-term credit at 1% or less. Sometimes it's even 0% if the state government chips in. The east and especially the northeast of India actually just gets less than 1% of that credit. Now this kind of disparity or regional imbalance means that something is actually not right. One of the questions that perhaps some of the panelists might like to go into is there an arbitrage? If you have short-term credit which is accelerating, and if you find that per hectare or per acre of credit is actually increasing, and if you find that the number of accounts actually are growing when actually the number of farmers is in fact depleting, then there seems to be something which is not quite right. Long-term lending seems to have dropped. And long-term lending is definitely, if it drops, it means that again we are not investing that much more in agriculture, that our amount that the government spend on agriculture is actually going down over the years, was always one of the complaints. And whether this long-term credit not growing but actually depleting or coming down, is it a reason for us to believe that really something is not right in the way our institutional mechanisms are working on the ground? Thank you very much.
The major problem which the farmers are facing when we talk to them is their fear to enter the bank branches, is the fear how should we, whether they can enter the bank branches. Yesterday I was addressing a seminar of SMEs in Jaipur, very industrial belt. But there also the small and medium enterprises had the issue of we fear entering the branches. So I think one of the reasons why farmers don't visit the branches, why they don't enter the branches, and where our role comes into that they should feel friendly to come to the branches, take credit in time, and often that delivery is late, so the distress increases. Investment credit is not growing. It is only crop loans, it is only short-term loans, and issue of short-term loans going up in South. I think NABARD has already done a study, and a lot of subvention funds are being diverted or misutilized. So this is an area where one has to look into financial literacy. that is something very, very important, both for distress, both for approach to the bank, both for approaching the bank when in distress. If there is a sign of distress, the farmers, in fact, I can talk with small entrepreneurs, avoid going to the banks. And similarly, the banks also avoid going to the farmers. So, a lot of financial literacy is needed to educate the people that in case of distress, because if we see the schemes, if we see in natural calamity, there is restructuring, there is rescheduling of the loans. So, a lot of efforts are there in that direction, but ultimately, if the farmer does not know that he has got these facilities, then how does he come out of those fears? So, financial literacy is a very important area where a lot of work is being done and has to be done, so that this fear of approaching the banks, fear of taking credit is mitigated. Now, other topic which I have been asked to speak, that was on credit side, though we as discussed, we have a lot of schemes for credit to farmers. So, credit flow is not a problem. Availability of funds with the banks is not a problem. Availability of how to bridge that gap, that is a major issue which can be addressed by financial literacy. Thank you very much.
First and foremost is that we are following the policy of a structured, planned and integrated approach to the financial inclusion. Needless to say, that includes the increased awareness as well as access to the financial services, and also encouraging the demand for financial services through financial literacy initiatives. We have gone through a bank-led model, which is technology-driven. We'll be using the business correspondence, which has already started, has a simplified branch automation and an authorization scheme. In addition to that, we have simplified the KYC norms as far as the opening of the basic accounts are concerned. It offers a bouquet of financial services which will be instrumental in bringing into access mode the people who have not been there for a very, very long time, and finally makes financial inclusion a viable institutional arrangement, both a win-win situation for the ones who have been excluded so far, and as well as for the people and the institutions which will be initiating it and will be a party to it. We have the FSDC, as you might be aware, and it also has a technical group which is headed by the Deputy Governor of the Reserve Bank of India. We also have, in addition to that, the state levels bankers committee, which along with the district managers and the lead district managers also operate at the ground level. So the integration of it from the topmost to the rural sector and at the ground level is an initiating task which has been there, but it has been further made more focused. We have already provided the guidelines for opening of the small finance banks and the payment banks. The process is on. We have received a record number of applications for that. And for the small finance banks, we are saying, as part of the guidelines, that they have to open at least 25% of the branches in the unbanked centers, rural centers, and preference will be given to the institutions which will be setting up more in the northeast and the eastern and the central regions of the country. We are quite hopeful that we will be able to bridge the gap, and also, which is the highlight of the today's seminar, is that increasing the farm incomes in the days to come. Thank you very much for your patient hearing.
Now I request Mr. Vijay Mahajan.
Thank you, Mr. Chairman. What we need to ask is credit to whom and for what? And let me just give you a segmentation approach. So let's take, first of all, those who have more than 2 hectares of land and also have irrigation. This is the cream of Indian farmers, like Punjab, Haryana, Western UP, some parts of Andhra Pradesh. They don't need more crop credit, but they need post-harvest credit, particularly in the form of warehouse receipts credit. Now let's come to those who have 2 hectares of land or more, but have no irrigation. Now, obviously the answer for them is to have irrigation. So really speaking, what they need is initially just protective irrigation. So once again, farm ponds, and wherever possible, if they are in the command areas, in the tail end areas, then things like water users association, participatory irrigation management, and so on and so forth. Those who have between 1 to 2 hectares of land, but also have irrigation, they should be encouraged to become specialist farmers. With normal cereal crops, they cannot be viable. But if they switch to dairy, they switch to fishery, they grow aromatic plants, spices, and so on, they can make much more out of that relatively small amount of land that they have. So they need credit for these things. They don't need the standard crop loan credit. Then those who have less than 1 hectare of land but have irrigation, and there are a lot of them like in eastern India particularly, they need credit for leasing in more land. Finally, and this is the most controversial of my suggestions, those who have less than 1 hectare of land and no irrigation, this is the dry land marginal farmer. I think we as a nation need to help them to get out of agriculture. And to do this, it's probably too late to work with the existing generation, but these farmers need to be given loans to help their sons and daughters get vocational training and get work in the non-farm sector, migrate to cities if they need to, or at least they should be given loans for buying two-wheelers so that they can stay in the village but commute to the nearby small town for work. Also, some of these farmers, if they still want to stay on land, they don't have sons and daughters, they can be encouraged to become solar energy farmers. So we do need credit, but we need credit with risk mitigation if it is the traditional type, and we need credit for all these 5 new types of exits or improvements in farming that I talked about. Thank you very much.
At some point in time, the government thought that it is impossible to introduce crop insurance in this country. But then came a brilliant man called Professor V.M. Dantekar. He said, no, there is a way. We said we can have an area-based, index-based approach. And then we started the insurance programs in this country. After running a few pilots, we introduced what we now call the National Agricultural Insurance Scheme, which is an index-based, area-based scheme, where you don't need to know the historical yield of the individual farmer. We do crop cutting experiments on a sample basis and arrive at the yield that the farmer is likely to get, and you compare it with the historical yield, and if there is a reduction or a loss of yield, all the farmers within a unit area, within that area, are compensated. The major challenge with an area-based yield index product is the time taken for assessment of loss. Even when it is area-based, it is sample-based, still it takes time because the government machinery that is involved takes time. And the quality of the CC data is also not very good. It takes a lot of time. So the farmers were getting claims, say about a year after the event, which is not acceptable. A new scheme called the Modified National Agriculture Insurance Scheme was introduced. Again, area-based, index-based, and but they included some additional risks, and they made a provision for an on-account payment, so that the farmer doesn't really have to wait for the entire crop cutting experiment data to be made available to the insurer, because based on the assessment, if the losses are likely to exceed 50%, then he was given a on-account payment of 25%. In the morning, during the address of the Honorable FME, mentioned about wider coverage, and because the penetration is still low, hardly 20% of the area of the farms are insured, and there's a need for increasing the coverage. Another problem is that when it is an area-based approach, the basis risk, there is a possibility that the farmer gets less or more than what he actually suffers, the loss suffered by him. That is high when you have an area-based approach. So when you reduce the size of the unit area from a district to a block and then block to a village panchayat, the farmer gets better indemnity. There were discussions, and one thought was, why not cover all the assets of the farmer under a single policy, a package policy which would cover his crop and the other assets, his equipment, his house, maybe his tractor. So some discussions are on. It's not easy to combine this because crop insurance is a different creature. These are seasonal activities, seasonal products, and the rest of the insurance products are annual in nature, and loss assessment is possible at individual level. So it's difficult, but then that if that is the demand of the market, one has to find ways and means of introducing such a scheme, maybe on a pilot scale, and then we scale it up later. We as institutions find it difficult to offer price protection because if it is a function of demand and supply, it's fairly easy to work out an actuarial product and price it. When there are so many policy interventions, because there was a mention about an export duty being increased, and therefore it has distorted the price. So if such events are very difficult to actuarially price, and therefore it becomes difficult to look at a price product. Thank you.
The result of NSSO survey 2004 indicate that 40% of farmers express their desire to quit farming. Therefore, improving quality of land, availability of cheaper and timely loans, improved irrigation facilities, better process of farm produce and enhancing productivity are some of the steps can be regenerate farmer interest. In the above context, the background cooperatives hold the key for positive contribution. The number of small and marginal farmers served the cooperatives in the largest at 203 lakhs compared to 195 lakh by the commercial bank. The three-tier cooperative structure is the backbone for the small and marginal farmers for meeting their funds requirement. For agricultural activity, the cooperative structure required large funds from NABARD in the form of refinance to meet the ultimate need of the farmer. With this, I thank NABARD for having given me opportunity to express the cooperative's point of view and wish the outcome of this event are useful to national agriculture policies. Also thank the audience for having patiently listened to me. Thank you very much.
Now I request my dear friend Sanjay Kaul for his views.
The reality check that we are faced with is that the services sector is growing much faster. Till rural households are able to access that sector, which today occupies 60% of GDP, you're not going to be able to alleviate agriculture stress. So there must be a way. We're talking of financial inclusion, but I think they talk about market or social inclusion so that they can access this burgeoning services sector, which is going to be the main driving force of India's GDP growth in the coming years. When it comes to issues of institutional efforts and marketing, I just want to flag off 3-4 areas. We talked about aggregation through FPOs and cooperatives. These are the two traditional structures. Here, as a representative of industry, I think we need to recognize that in most services, the private sector has been playing a role. In the area of aggregation and agriculture markets, bulk of the marketing is done by private service providers. I mean, you call them trading companies, you call them artiyas and commission agents, but they have a role in the value chain. And I had made the suggestion to the NABARD National Conference that find a way where the private sector can also be a stakeholder in the FPO. Find a way where can he be a 26% stakeholder in a FPO? Because then he will find that bridge between the agriculture, agri-produce FPO, who doesn't have the wherewithal or the ability to withstand a marketing risk. Whereas a marketing company can face the vagaries of the market. The farmer is already facing a lot of risk in terms of production risk. The second enabler, apart from the private sector service provider being part of this institutional framework, is that investments need to be created to provide value addition in agriculture. You can't talk of remunerative prices of wheat and rice beyond a point. You can have MSPs, you can have MSPs going up 10% for tur dal and for oil seeds. But if you really want a fundamental change in farm incomes, you will require value addition through processing. A food processing industry is again not going to grow in the immediate term, but what is possible, and that is the kind of thing which as institutions like this we are trying to do, is doing primary processing. Basics of grading, standardization, so better grades, better standards, fetch better price. That really doesn't mean great revolutions in agriculture productivity or yields, but it just means that the farmer who produces a better grade of crop gets a better price from the market because it's standardized, it fetches the export. Take something like corn. You do have a very good market for corn, but you require corn without aflatoxins, you require corn which has the ability to be aggregated. A shipload is 40,000 tons. A farmer cannot, or even FPOs, you require perhaps 1,000 FPOs to come together for one shipload. But that's the kind of aggregation we're talking of, and that's the kind of uniformity of grades and standards we need to develop. So again, the role of a private sector player to be part of that institutional framework. The third critical element is pricing. Here, I think Dr. Ashok Gulati did talk about the MSP regime, not that you shouldn't have remunerative prices, it should not be distortionary. So you're creating structures in the rural economy where some crops are getting better advantage or certain geographies are getting better advantage than the others. So long as you're creating farm support structures which are not market distortionary, I think everybody acknowledges that farm support of large investments by the public sector and the government are required so long as they don't distort markets.
Now I request Professor Raghuram.
My focus is going to be on rural infrastructure. Focus be mitigating rural distress and enhancing rural income. And I'm glad that NABARD, has the R significantly there. So creation of opportunities for non-farm activities, including, of course, for improving agricultural productivity. And what should be the profile of the potential non-farm income generating activities? I mean, I haven't really studied or gone into that, but I would believe agro-processing would be one obvious choice in rural areas. So, of course, we need to be able to target, what are the kinds of activities we can have in rural areas that are income generating, and that should then drive the priorities for rural infrastructure development. Government has looked at access as the primary driver for infrastructure. In many places, the time has come that we need to move beyond access to capacity and maybe even to quality. A lot of last mile connectivity can even worry about just motorcycle friendly paths to reach household levels, combined with maybe local innovations of using motorcycles to carry a lot of goods, maybe motorcycle ambulances. There is a lot of opportunity in that sort of support service to improve the overall transportation. Moving on to electricity. Of course, the electricity coverage which is measured at a village level is 94% nationally. Of course, we obviously need to get it to 100%, and solar energy could be a complementary focus. But there is a lot of variance. There are many states that have 100% coverage, but many of the northeastern states range from 10 to 20% uncovered villages yet. And I was wondering if, a special missionary effort to just complete that. And maybe there's a lot of donor funds, the Department of Northeast, which seems to have a lot of funds. Of course, again here, beyond access, quality is an issue. So do we get 24/7 power? Do we get power without, voltage fluctuations? Quality and impact measures really need to be developed explicitly and measured by third-party independent surveys. Maintenance should be provided in all infrastructure financing. Of course, local communities should be involved in planning, maintenance, and behavioral change. Access measures, now it's time we moved from just being point or node oriented to area coverage oriented. How far away is any point in the geography from the nearest road, from the nearest source of electricity? What is the area not having mobile coverage? I mean, many villages, small towns do have mobile coverage, but mobile in a true mobile sense, can I in any road, in any rural road, continue to have mobile coverage when there is, times of distress? Do I actually have access to mobile? And I think that's the direction to move, which will probably come at not too significant a marginal cost. Now, we need a mechanism where we can take a holistic sense on that, and so that connectivity in its best sense in terms of access to centers, where the rural folk need to go, gets addressed. NABARD's role, given it has this, its mandate, mission, and leveraging its financial capability, they should actually try to become a game-changing catalyst, in this journey of our providing much more development-oriented rural infrastructure. Yeah. Thank you.
Thank you, Professor Raghuram. I think for your excellent presentation on rural infrastructure. We have the last panelist, Professor Pulak Mishra.
The study is funded by NABARD. We are trying to understand the socio-economic impact of RIDF initiatives in Odisha. So basically, two sets of projects we have picked up. One is project related to irrigation, and the second one is project related to roads and bridges. We have selected 8 districts covering different agroclimatic zones of the state, and then we have gone for various rounds of stratification to pick up the sample. We have visited near about 30 odd different projects. Out of that, near about 18 are related to irrigation and 12 are related to roads and bridges. This table basically talks about changes in area under cultivation, then production, and then yield across different crops. And we can see that for all the crops, there has been increase in production, there has been increase in area, basically leading to crop diversification or changing cropping pattern. But then, if we see for pulses, yield is a matter of concern. Of course, it has registered a negative growth, but then there are issues also. We have interacted with the farmers at length. What is basically coming up is getting quality seeds at right time. And second, many of the farmers, those who are venturing into pulses, they are not well exposed to the right kind of input combination. Our interactions with the farmers suggest that farmers are confused about 2 things. One is which crop to go for and what kind of inputs to be used. What should be the right combination of inputs? In the morning, there was certain concerns regarding diversification of agriculture. Yes, it is a concern, but then diversification is also to be ensured, particularly to have stability in farming. But then the question is, which crop to diversify for? Then linking it to market. So the challenge is here not exactly in thinking of market, policies, or institutions in isolation of one another. Rather, the challenge is of integrating these 3 pillars. The other very, very important issue is nothing but occupational diversity. There is a possibility that with increase in or with improvement in rural infrastructure, land price will go up and there will be increasing transformation of farmland into non-farm activities. Then the challenge is to make agriculture remunerative. And there are 2 ways of doing the thing. One is shifting the surplus workforce from agriculture to non-agriculture activities. And secondly, to enhance yield or productivity in farming. Thank you very much.
Thank you, Professor Mishra.
Ladies and gentlemen, we are indeed fortunate to have had a fruitful and thought-provoking discussion from our distinguished panel. I thank you all for your considered views.